myself Vaibhav. In today's session of Visual Jforex, we will be continuing with the algorithm development demonstration in which I have designed and developed the simple algorithm using the indicator named average directional movement index rating. This is a long name and to shorten it, we simply use its initial, the ADXR indicators. So let us now head to the Visual Jforex board which has been developed by the Dukascopy Bank SA. This is the setup involving on candle as the start point. So far in the prior session I had done this instrument subscription, then the position amount was defined at 0 and I got the ADXR blocks as we are defining the logic on the hourly time frame. So here the time period for each candle is hourly and cumulatively 14 hours data will be looked into while calculating this ADXR block. Look at the price action. These many historical candles have been used of the hourly time frame and to pinpoint the exact entry point. Whenever the other conditions are fulfilled, we will be using these 10-second candles. Now, in this session, we will be getting started with the buy side logical requirements. So for any buy trade to be executed, we need the ADXR value to be on the rise and it should be about 25. 25 is considered a threshold where we see if the underlying instrument has crossed the ADXR value of 25. That means momentum is picking up and there is good enough movement in the underlying instrument and it might be starting to trend again after having spent time in consolidation phase. So that's why the initial value should be about 25. And as I said, one more condition is that ADXR should be on the rise. But we don't really want to trade till it is rising or even after it starts declining. So on the higher side, the band is being created and 35 will be the highest value below which only the trades will be executed. Otherwise, the ADXR can continue to go higher up, but it won't really result in any fresh execution beyond the defined value range for the ADXR. So let us now start building on this logic on the Visual Jforex platform. First, we will need to look into its closing values also. So for hourly time frame, after this ADR condition is in place, we want to see whether it has closed below the prior candle or it has closed above it. So we will be taking the two historical candles price data, the last one and the penultimate one. So we are using the shift value of 1 and 2 respectively. And here the requirement is that for a sell trade, uh, sorry, here in today's session I will be only explaining the buy side. So I will take a demonstration using the buy side opportunity. So I will have to search if I can get any. I think this time around, but the ADXR value is pretty high, so that might not be the case. So you will have to go back in time somewhere here. But I'm not really seeing any time where the requirement has been fulfilled. So we need for any buy trade to happen, the ADXR value to be in the price band, and then the last hourly candle should have closed with gains, and there we will define certain pips value, certain pips which should be the bare minimum. That should be the difference between the closing price and the opening price for last hourly candle. So I think 7 pips should be good enough. So it's an arbitrary value, but it is more based on the observation there. I feel that 7 pips for the 1 hourly movement is good enough indicator of the volatility. So that needs to be the case. And the penultimate candle should have closed with losses. And whenever the price reversal happens, the closing of the last candle should be above the prior candle's high value. So that means there is good enough momentum and there is now fresh breakout in place. So that will be the time to look for initiating the buy trade. I haven't really been able to find this example on the chart. Maybe we will have to design the logic and then run it on the historical tester to see as and when the conditions were there in place, and if at that point in time any trade was executed, how it might have unfolded. So we can do the historical data test and see what is the probability or profitability for the underlying logic. So now here we will first define 7 pips. For that, calculation expression block will have to be used. I will take 2 at the same time. Now here we will have to take the pip size for the default instrument. Okay, here it is, and create a new variable. It's like candle volatility, and it should be minimum 7 pips, so that condition. And by doing a1 into a2 we get 7 pips value. A1 into a2, this will be minimum difference. And then of course we have to also see the actual difference, price difference. For that we will have to take candle 18's closing and opening value, and since we are working on the buy side, its closing should be above the opening price, so we will deduct the opening price from the closing price to arrive at the actual pip difference. So candle 18 is the hourly candle with look back period of 1, and we need its closing value, its opening value, and its result A1 minus A2. This will be actual difference for the buy trade. Okay, so this is the condition, and now we will take multiple action and start adding the conditions on the buy side. Here I think it is included in logical. Okay, here it is. For the time being I am joining the trade flow here, but later on once we want to define some other variables which we are going to need in due course of time, we will disconnect it, add the blocks, and then we will join it again. So now let's get started with these if else statements. We are going to need a couple of these blocks, and we need ADXR value to be on the rise. So for that, the last hour's ADXR value should be above the ADXR value of 3 hours back. So this first input greater than second input. Okay, and then we also want the ADXR to be on the rise, and it should be about 25. So for that, I will have to create a new. Okay, so condition, we don't need to create a new variable. I have straight away put the value to do the comparison, and this should be above 25. So first input greater than second input, but on the higher end it should also be below 35. So whenever these are initial times, then only trade execution will happen whenever the ADX value is between these two defined limits. Okay, then looking into the price volatility, for that we will be using the values of candle 18 and candle 19 now, and we need the last candle's closing value to be higher than its opening value by at least 7 pips. So for that we will have to look into the actual difference and the minimum set defined difference. Here we have to take first input less than second input, and now coming to this actual difference and minimum defined difference, we need it to be greater. So first input greater than second input, and we need the penultimate candle to have closed lower, that is its closing price was below the opening price. So for that also we will be doing the comparison. Its closing value to be below its opening value. So candle 19 candle close is lower, first input less than second input, and also we want enough of momentum, and for that we need candle 18's close to be above the candle 19's highest value. So again we need to do the comparison. Candle 19 candle high needs to be less than the candle 18's candle close. Okay, so here we have defined these conditions, and now we will also have to look into the exact entry point. For that I will have to take two more if blocks, but prior to that I will reassemble this below the multiple action blocks. I'll join it here. Now two more if blocks are needed to compare the closing values for candle 20 and candle 21 with the closing value for candle 18, and here we need the price to be on the rise, and that means the last 10-second candle should close higher compared to the candle 18, that is hourly candle's closing value, and just prior to that the candle 21 should have closed below the candle 18's candle close. So that will be the point where the execution will happen. Now we will have to take the candle 20 and candle 21's closing values. We also need candle 18, so first we will take this as the second input for both these blocks, and now we want candle 20's closing value to be higher, first input greater than second input, at the same time candle 21's closing to be below the candle 18 candle close. So here candle 19 candle high needed to be less than the candle 18 candle close. So we have to join it like this. Alright, so we have defined all these 7 conditions which need to be in place for the execution of the buy trade. Now we take the market open. So as and when the conditions get fulfilled, the execution will happen at the market price. So we need the trading block now. Open at market. And there is going to be the market order. Yeah, this closing value needs to be less. Now we have to define these input parameters also. The instrument is default instrument, but here the trade amount needs to be defined, and for that we can take any appropriate value as per our equity in the account. 0.1 million I'm taking. Slippage, I think instead of 5 pips, 2 pips is good enough. Then comes the question of defining the stop loss and take profit. And for this combination, I think it would be better if we keep the stop loss and the take profit kind of variable where it can consider the actual volatility at that point in time, and depending on that it can be considered an appropriate stop loss or the take profit order. And for that I think the difference between the last hourly candle close and its lowest value is a good enough marker. So as long as the price is trading above the lowest point of last hourly close, that is good enough to continue with the current position on the buy side. But if there is any break below that crucial level, then the stop loss will be executed, and that will also be a signal of getting out of the trade and simply sitting on the sidelines till conditions become favorable again for the execution of the trade. So that's how we can define that. And for that, we will have to carry out calculations tomorrow again. As time is now running out, I think it's time to wrap up the session. So these two variables we will define in next session. Thank you all for joining in. You can try out the structure on your own also. And once we are done with the set side also, we can do the testing using the historical data to see what kind of probability the said algorithm is offering. So that's it from my side. See you next time. Till then, goodbye.